Welcome everyone to Vested Interest. This is Shane back for another stock pick of the day video. We don't typically do them on Fridays, but my daughter had a softball game yesterday, so I said I would do one today. Today we're going to take a look at Sysco. It is May 24th, Friday. Let's jump in. Before we do that, if you could take a moment to hit the thumbs up button down below if you find any value in the content, hit the subscribe button, make sure you are subscribed to the channel, join us on this journey of financial freedom, join the Vested Interest community, hit the notification bell so you're notified whenever we put out any new content, and drop a comment down below. Let me know what you think of the video and share with anyone you think that might find value in the video, any investors out there that you know. Doing all that really does help a small YouTube channel like mine. It helps with the YouTube algorithm. The more you do that, the more it spreads the videos to other people. And also, I really hope you have a great holiday weekend. Let's jump back into the video. This is the Vested Interest Stock Screener. This is how I set up the video. So we're going to run through these. At the end of the video, we will look to see if it meets 5 of 8. If it's a financial company like a bank, typically I look at price to book as well. This is not, so we won't look at that. So we're really focused on this 5 of 8. Let's go over to Sysco. If you want to know more about this company, check them out at www.sysco.com. That's www.sysco.com. That is their homepage where I pulled this information from. Sysco is the global leader in selling, marketing, and distributing food and non-food products to restaurants, healthcare and educational facilities, lodging establishments, and other customers around the world. These are some of their brands, right? I don't really recognize any of these except I do recognize Butcher's Block. But because of the nature of their business selling to healthcare facilities, restaurants, educational facilities, I'm not surprised that I don't recognize any of these brands. Maybe you do. Wholesome Farms, actually, I think I recognize Wholesome Farms as well. And then again, who they serve: restaurants, healthcare and senior living, higher education, government, food service management, travel, leisure, retail. So you have probably eaten some food provided by Sysco at some point in your life, whether it was at school or a restaurant, or if you're in the government, like I was in the military, maybe in the government. Now, I typically do not look at companies that are up on the day, but again, we're doing this on a Friday, which is not typical. So I thought I would look at one in my portfolio. So full disclosure, I am long Sysco. We are talking about Sysco Corporation, ticker SYY. They were up slightly on Friday, closed out the day at $72.96. 52-week range as low as $62.24, as low as $82.89. So they are kind of floating right in between their 52-week low and their 52-week high. Market cap of $36.333 billion, a beta of 1.16, so more volatile than the overall market, and you can see that volatility here throughout the day. PE ratio, price to earnings, $17.80 per share. EPS at $4.10 per share. They have an earnings date coming up July 30th through August 5th. Forward dividend is $2.04. They are a quarterly payer, so we'll see that here in a little bit, or you can do the math and divide by 4. Nice starting dividend yield here at 2.8%. Ex-dividend date is coming up July 5th, so not this month, but next, and they will pay out July 26th. One-year target estimate, at least according to Yahoo Finance, they see it hitting $85.10, which would be a new 52-week high. Now let's jump over and look at dividend yield theory. To do that, if you were to go to Yahoo Finance, where I pulled this, not affiliated, just one of the sources I like to go to, over here to the left of the chart here, you would see a lot of tabs, financial tab, analysis tab. This is the statistics tab. Under the statistics tab, go down to dividends and splits. Look at their 5-year dividend yield average at 2.48%. You compare it to its current 2.8, or over here where it says forward annual 2.8, same number. And since it is higher than their 5-year average, it speaks to undervaluation. Again, these are inversely correlated. If the current is higher than the 5-year average, undervaluation. If the current was lower, that would be excuse me. If the current dividend yield is higher than the 5-year average, that speaks to undervaluation. If this happened to be lower, that would speak to overvaluation. Inversely correlated. Now, payout ratio is low at 48.78%. I like 75% or lower. So this is much lower than I would be willing to accept, and gives them a lot of room to continue to increase this dividend over time, and it speaks to the dividend being safe. Now we're going to jump down here and look at free cash flow. I want growing free cash flow over time, because typically if a company has growing free cash flow, they can do some things with it. They can pay down debt, they can buy back shares, they can pay a dividend. We want the dividend to be safe, and over time they can raise that dividend, make acquisitions, and reinvest back into the company. So free cash flow going back to 2020, you see here 898 million. They repurchased some shares then as well. 2021, 1.4 billion. 2022 looks like it dropped down to 1.5 billion, but take a look at the next one over here. Repurchase of capital shares, they jumped that back up to 499 million. So I'd say that accounts for this drop here. And then 2023 up to 2 billion with the continuation of rebuying its shares. So nice steady free cash flow growth as well as repurchasing shares. The only year they really missed there was 2021. So I really like the metrics on this one overall so far. Now let's jump over to stockanalysis.com. This is another site that I like, and I always recommend more than one site. I'm not affiliated with either. You pick any sites that you want. I just recommend more than one so that you can look and make sure the information you're getting is accurate and up to date. And some of these sources present different information. Stockanalysis.com, for example, goes back further in time than Yahoo Finance does, or at least with their free service. They both have a paid service you can get, but I don't use the paid services. I try to get what I can for free. You should too, in my opinion. And they have 11 analysts that have taken a look at this. They call it a consensus buy. They have a low estimate of $76. It currently sits lower than their lowest estimate. So if it was to come back up to their low estimate, that would be a 4.17% increase. Average estimate of $83.82. That would be a 14.88% increase. And a high estimate, pretty close to what we saw with Yahoo Finance there, of $90. That would be a 23.36% increase from where it currently sits, and all the while you could collect that 2.8% dividend yield. Now we are going to jump over to statistics. We're going to look at return on equity and return on invested capital, which tells us how efficiently the company is reinvesting its capital back into itself. And I like 10% or better for both these metrics. Jumping over here, you can see return on equity, ROE, is sitting at 96.20. That is smoking high, one of the highest I've ever seen. Return on invested capital is sitting at 16.03%, very nice. So they both meet the 10% or better metric that I'm looking for. EPS growth forecasted, I like 5% or better. They are sitting at 11.48%, so beats that metric there with the forecasted revenue growth of 4.32%. I know this is not the metric, but you do want to see growing revenue, so I always throw it in there because it's tied right next to EPS growth, so it's an easy one for me to throw in there as a little bit of a bonus. Now, jumping over to their dividend history real quick. Before we do that, again, I am long Sysco Corporation. I do have 101.314 shares. It is a position I would like to add to a little bit. I am up slightly, 5.52%. My cost basis is $68.29. Now, I probably wouldn't wait for it to drop down below my cost basis. Here, 15% of its 52-week low would be $71 and some change. So if it was to drop in the mid 71 range or lower, I probably would look to add a little bit here. It would be nice if it dropped down a little bit below my cost basis, but I don't know if it's going to quite make it there. It may, and if it does, then I'll continue to add. But I don't mind adding it at under $71 and around 50 cents. That would be pretty close to 15% of its 52-week low. But again, if it does drop below my cost basis, I will definitely be adding to this one. This is one I would not mind running to 150, 160, even 200 shares if it was to drop down, towards its 52-week low, back down in the low 60s. I would definitely add a significant chunk here. So as you can see, quarterly payout ratio under 50%, 49.76. I think Yahoo Finance had it in the 48 range. Not a huge difference there. Dividend growth at 2.03. That is one of the downsides here. Not a very fast grower. Would like to see them grow a little bit, even if it was 3-4% to kind of match what their expected revenue growth is. That would be nice, but you're still getting some growth, and you have a nice starting dividend yield at 2.8%. So I don't mind that, and it's steady growth, 55 years of growth. So if they can grow another 55 years at 2% with a 2.8% starting dividend yield, I would be a very, very happy camper there. Buyback yield to 1.55%, shareholder yield to 4.36%. You really want these to be in the positive and as high as possible. So good numbers overall. Now taking a look at their dividend history. Again, you can see here they do pay out on the January, April, July, October timeframe. I really like that. Not a lot of companies do, so this is one of those rare exceptions, and they've been doing it for a long time. And then you can see here in 2020, January of 2020, they were paying 47 cents. Raised it up in June of 2022 to 49 cents. Again, in July of 2023 up to 50 cents. And then most recently, July 5th here in 2024, they are raising it up to 51 cents. And I needed to check to make sure that I've included this on my portfolio update as one that's raised its dividend. I think I have, but let me make sure and check. Up to 51 cents there. So very good numbers overall. Again, I'd like a little bit more of a pullback here. It's not a terrible starting price, but again, 15% of its 52-week low is usually where I like to be, or lower, and that's right around $71.50. So it's pretty close. Just needs to drop a little bit lower there, and then I may start nibbling. And then if it was to drop back into the 60s, especially the low 60s, close to its 52-week low, I might really load up, add maybe 4 or 5 to 6 to 8, 10 maybe tranches at a time, right? Kind of like what I'm doing with the Starbucks right now. I'm adding 10 shares a week for a while. So if this dropped back into the low 60s, I might do that here too. Now we're going to jump back over to the screener, and this is what we ran through. So understand the business. That's where we started. Growing free cash flow. Yes, growing free cash flow over the last 4 years. Also buying back shares, which I like. Growing dividend. Yes, even though it's slow. Dividend payout ratio of 75% or yes. Yep, it's actually under 50%. Check valuation based on, dividend yield theory. Yep, according to dividend yield theory, it's potentially undervalued. Buy below current cost basis or within 15% of its 52-week low. It is not below my current cost basis, and it is not within 15% of its 52-week low, so no check there. Return on invested capital and return on equity equal or greater than its industry or average of 10% or better. It is 10% or better, so check there. And earnings per share growth at 5% or better. There was a check there. So overall, 1, 2, 3, 4, 5, 6, 7 of 8. So this is what you're looking for, folks. This is a very attractive company, in my opinion. That's why it's in my portfolio. And if it was to drop just ever so slightly more, it is one that I will be adding to in the future. Well, that is it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. And drop a comment down below. Let me know what you think of the video. Let me know if you are looking to add this to your portfolio. You're going to throw it on your watch list. Is it one that's already in your portfolio? Is it one you're looking to sell or get out of? Maybe you don't like it. Maybe it's not been a good performer. Let me know in the comment section down below. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. And again, hope you have a great holiday weekend. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great weekend. See you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing for educational and entertainment purposes. Investing involves risk and money, so never invest in an amount of comes losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice of a certified financial advisor.